Buffett's 2026 investing strategy, where the smart money is going next. Warren Buffett is back in the headlines, not because he's chasing the latest trends, but because every move he makes hints at where smart money will flow in 2026. The Oracle of Omaha has spent decades observing markets, businesses, and human behavior, and his strategy is as much about psychology as it is about numbers. Buffett's genius isn't in predicting every twist and turn of the market. Instead, he understands fundamentals, long-term trends, and human behavior, and he applies these insights consistently. Each investment he makes sends a signal: where opportunity exists, where risk lurks, and where patient investors can prosper. As we approach 2026, volatility is expected to rise. Headlines, social media hype, and speculative investments can tempt even experienced investors into rash decisions. Buffett's approach reminds us that success doesn't come from following the crowd. It comes from disciplined, patient, and informed decision-making. In this video, we'll uncover Buffett's investing strategy for 2026. We'll examine the sectors, industries, and companies he's likely watching, and explore how you can align yourself with the smart money without panicking in times of uncertainty. By the end, you'll understand not only Buffett's approach, but also practical steps to implement his principles and invest with confidence, discipline, and foresight. The core of Buffett's strategy: value and patience. At the heart of Buffett's 2026 strategy are two pillars: value and patience. Value investing means identifying businesses whose intrinsic worth exceeds their current market price. Buffett isn't interested in hype, viral trends, or short-term gains. He seeks companies that produce real goods, solve real problems, and generate consistent profits. For instance, when Buffett invested in Apple, it wasn't because it was the most talked-about tech company. It was because Apple demonstrated loyal customers, recurring revenue, and exceptional management. That same logic applies in 2026. Smart money goes where fundamentals outweigh speculation. Patience is the other critical factor. Buffett doesn't flip stocks based on daily market swings. He holds investments over long periods, sometimes decades, allowing the power of compounding to work its magic. In 2026, the focus will remain on deploying capital thoughtfully, waiting for the right opportunities, and avoiding impulsive decisions driven by fear or greed. The lesson for investors is clear: don't chase what's popular. Instead, seek what is undervalued, essential, and sustainable, and give it the time it needs to grow. Sector insights, where the smart money is likely to flow. While Buffett rarely reveals his exact moves ahead of time, his past investments and strategic patterns provide clues about where smart money may head in 2026. Here are sectors likely to attract disciplined capital. 1. Energy and utilities. Buffett has long invested in power generation and infrastructure, including renewables. With global energy demand increasing and the push for sustainable infrastructure, these sectors offer steady, long-term returns. 2. Financial institutions. Banks, insurers, and payment systems remain core to Buffett's portfolio. These sectors benefit from rising interest rates, financial innovation, and the growing need for secure, scalable financial services. They are resilient, even in turbulent markets. 3. Consumer staples. Products like food, beverages, and household essentials are recession-proof, with predictable earnings and brand loyalty. Smart money favors businesses people need daily, regardless of economic cycles. 4. Healthcare and aging populations. With a growing global population and rising medical needs, healthcare services, pharmaceuticals, and medical devices are poised for sustained growth and stable returns. 5. Technology with tangible value. While Buffett is cautious with tech, he invests when companies demonstrate predictable revenue and essential services, like Apple. In 2026, tech opportunities may include AI infrastructure, cybersecurity, cloud services, and digital payment solutions, all areas providing real value rather than hype. The common thread across these sectors is durability, necessity, and profitability. Buffett doesn't invest in fleeting trends. He invests where value meets opportunity and sustainability. Buffett's principles for spotting smart money opportunities. Buffett doesn't randomly pick stocks. Instead, he evaluates businesses through timeless principles that help identify smart money opportunities. Durability. Can the company withstand market cycles and remain profitable over decades? Management excellence. Are the leaders competent, disciplined, and ethical? Margin of safety. Is the stock reasonably priced relative to its intrinsic value? Essential service. Does the company provide something people cannot live without? By applying these principles, investors can navigate markets without succumbing to hype, emotion, or panic. Buffett's 2026 strategy emphasizes long-term thinking and disciplined deployment of capital, rather than speculation or impulsive trading. Lessons from Buffett's past moves, predicting smart money in 2026. History provides a roadmap for 2026. Buffett's investments in Apple, Coca-Cola, and financial institutions illustrate how smart money operates. Buffett didn't chase tech hype. He invested in a company with strong fundamentals, loyal customers, and predictable profits. Today, it's one of Berkshire Hathaway's largest holdings. Dot-com bubble 2000. While others chased overvalued tech stocks, Buffett remained cautious. He waited for fundamentally sound companies at reasonable prices, avoiding the bubble's collapse. 2008 financial crisis. During panic selling, Buffett deployed capital strategically into undervalued assets, preserving and growing wealth while many others suffered losses. The takeaway for 2026 is simple: follow principles, not panic. Smart money is guided by analysis, discipline, and patience, not by the whims of the crowd. Sector spotlight: energy, utilities, and renewables. Energy is a cornerstone of Buffett's portfolio, and it's likely to remain a major focus in 2026. Buffett has long invested in power generation, utilities, and renewables, understanding that energy is the backbone of every economy. Global energy demand is growing due to population growth, urbanization, and industrial expansion. At the same time, governments and corporations are pushing for clean energy solutions, from solar farms to wind turbines. For investors, this presents an opportunity to deploy capital in essential and future-proof infrastructure, generating steady, predictable returns. Utilities also offer stability in volatile markets. While the broader market may fluctuate wildly, energy and utilities provide consistent cash flow, making them ideal for long-term investments. Buffett's principle of patience applies here. Buy when prices are reasonable, hold for decades, and let compounding work its magic. Financial institutions, resilient wealth builders. Financial institutions have long been a bedrock of Buffett's investments. Banks, insurance companies, and payment processors are central to economic growth and often benefit from rising interest rates, increased lending activity, and technological innovation. In 2026, financial services remain crucial for investors seeking both stability and growth. Insurance businesses, in particular, generate float, money held temporarily that can be invested for profit. Buffett has leveraged this strategy effectively for decades, showing that smart money follows predictable business models, not speculation. Fintech innovations, digital banking, mobile payments, and blockchain infrastructure may also attract attention. The key is to focus on companies that produce real revenue streams, solve actual problems, and are managed responsibly. Consumer staples and healthcare, recession-resistant sectors. Consumer staples are recession-resistant because people buy necessities regardless of economic conditions. Food, beverages, hygiene products, and household essentials are consistent revenue generators. Companies with strong brands and loyal customers weather economic storms better than most. Healthcare is another critical sector. Aging populations, rising chronic disease rates, and medical innovation ensure consistent demand for healthcare products and services. Pharmaceuticals, medical devices, and healthcare providers are likely to remain attractive to smart money in 2026. Buffett's principle is clear. Invest in sectors that provide essential goods or services, where demand is relatively inelastic and long-term growth is predictable. Technology with tangible value, the new frontier. Buffett has historically been cautious about tech investments. He avoids companies with unpredictable revenue models or excessive hype. Yet, when tech demonstrates real value, recurring revenue, and indispensable services, he invests decisively, Apple being the prime example. In 2026, smart money may flow into AI infrastructure, cloud computing, cybersecurity, and digital payment systems. These sectors are integral to modern life, produce predictable cash flows, and offer long-term growth potential. The principle is simple: don't chase trends. Identify tech that solves real problems, adds measurable value, and maintains customer loyalty. The Buffett mindset, thinking differently. Buffett's 2026 strategy isn't only about what to invest in, it's about how to think like smart money. Long-term thinking. Look decades ahead rather than reacting to daily market fluctuations. Emotional discipline. Markets are volatile. The crowd panics, but smart money remains calm. Patience with opportunities. Buffett waits for undervalued assets and the right price. He often compares investing to baseball. You don't swing at every pitch. You wait for the perfect one. Capital preservation. Protecting your capital is just as important as seeking gains. Avoid unnecessary risk and focus on quality investments. In 2026, adopting this mindset can differentiate average investors from truly successful ones. Real-life case studies, following Buffett versus following the crowd. Buffett's career offers multiple lessons about smart money versus herd mentality. Dot-com bubble 2000. Many investors chased tech hype, buying companies with no earnings. Buffett avoided these overvalued stocks, preserving capital and waiting for better opportunities. 2008 financial crisis. Panic swept the market. Buffett deployed capital strategically into undervalued financial assets, growing wealth while others lost confidence. Apple investment, 2016-2025. Despite criticism of tech valuations, Buffett analyzed fundamentals and invested, demonstrating that independent thinking and discipline outperform hype-driven decisions. The takeaway for 2026: avoid distractions, focus on fundamentals and value, and act when opportunity aligns with careful analysis. Practical steps to align with smart money in 2026. Here, how you can apply Buffett's principles. 1. Identify undervalued companies. Look for businesses with strong balance sheets, recurring revenue, and essential products or services. 2. Diversify strategically. Spread investments across resilient sectors like energy, healthcare, financial services, and consumer staples. 3. Stay calm during volatility. Market dips are opportunities. Deploy capital thoughtfully instead of reacting emotionally. 4. Focus on long-term growth. Avoid chasing short-term hype. Compounding works best over time. 5. Evaluate management. Invest in companies with competent, ethical, and disciplined leaders. 6. Maintain cash reserves. Buffett always holds cash to seize opportunities when markets dip. Flexibility is a critical advantage. By following these steps, you can align your investments with the smart money approach, replicating the same principles that have built Buffett's fortune. The 2026 Edge: Why Buffett Outperforms. Buffett's 2026 strategy isn't about luck. It's about preparation, discipline, and emotional control. While markets fluctuate and sectors rise or fall, investors who focus on durability, essential services, and long-term growth are poised to outperform. Buffett's principle remains timeless. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. 2026 may offer investors such a moment. Those who are ready can capture real growth, resilience, and lasting wealth. Buffett's 2026 strategy provides a roadmap where opportunity meets discipline. Markets will fluctuate, headlines will distract, and speculative investors may falter. But by focusing on value, patience, and sustainable businesses, you can thrive in any environment. Your Buffett moment is coming. Will you be ready? Start by thinking independently, researching thoroughly, and deploying capital strategically. By aligning with smart money principles, 2026 can be a year of real growth, financial resilience, and lasting wealth. This video is for educational and informational purposes only. It does not constitute financial advice. Please consult a licensed financial advisor before making investment decisions. Don't forget to comment below, share with friends, and subscribe for more insights from the world's greatest investors.